So, you're trying to buy a home in Vancouver's wild, hyper-competitive market. You already know that speed is pretty much everything, but you want to know what's even more important than a quick offer? It's having all your mortgage paperwork locked, loaded, and ready to go. That right there is your real secret weapon. So let's dive in and get you ready to win. Okay, picture this. You've spent weeks, maybe even months, endlessly scrolling through listings. You've gone to a dozen open houses, and then you find it. The one. The excitement is real, right? And you are ready to jump on it. But here's the thing. In a market where homes can get multiple offers in just a few hours, being ready to make an offer, well, that's not quite enough. The real question is, can you get your financing approved before another buyer, one who has all their documents perfectly lined up, swoops in and snags that dream home right out from under you? This is exactly where having every single piece of paper ready becomes your ultimate winning edge. So let's just forget all the stress and the confusion. Think of this as your 5-minute strategy session. We're going to build out your game plan, document by document, so you can walk into that mortgage application with total, absolute confidence. Let's kick things off with level 1. This is the warm-up, just proving you are who you say you are. And, this isn't just for the lenders. It's actually a requirement from agencies like FINTRAC, that's Canada's Financial Intelligence Unit, to help prevent fraud. They really need to know exactly who they're dealing with. So the key thing here is to have these ready to scan. You're going to need 2 pieces of government ID, think a driver's license and a passport, and at least one of them has to have your photo. Why 2? It's just a simple cross-verification measure. Then, add a recent utility bill to prove your address, which just confirms you live where you say you live. And of course, have your SIN ready for that all-important credit check. It's simple stuff, but it's absolutely non-negotiable. All right, level 2. Now this is the big one, proving you can actually afford the mortgage you're asking for. Lenders need to see stable, verifiable income. Let's break down exactly what that looks like. Now, if you're a salaried employee, this is your core trio of documents. Go ahead and grab your pay stubs from the last month, get a letter of employment from your HR department, and pull up your T4 slips from the last 2 tax years. See, lenders aren't just looking at what you make right now, they want to see a clear pattern of stable employment. That 2-year history gives them the confidence that your income is reliable and, likely to continue. Now, out of everything we've talked about so far, I want you to pay special attention to this next one, because this document right here is what lenders consider their absolute gold standard for verifying your income. And here's why. The Notice of Assessment, or NOA, is basically the CRA's official stamp of approval on your reported income. While your T4 slip shows what your employer paid you, the NOA shows the government what you actually declared. It proves to the lender that the income you're claiming on your application is the exact same income you reported to the government. You'll need the last 2 years of these, which, by the way, you can easily download from your CRA My Account online. Okay, so you've proven who you are. You've proven what you earn. Now let's get into level 3, the down payment. The lender knows you have the income, but now you need to prove you have the cash. And more than that, they want to know the story of where that money came from. And that story is told over 90 days. Lenders need to see a 3-month history for any and all bank accounts you're using for the down payment. So why 90 days? Well, they're looking for the steady accumulation of funds, not some mysterious large deposit that just appeared last week. This is all to make sure the money is legitimately yours and not some short-term loan that you'll secretly have to pay back. And these are the legitimate sources that lenders are looking for. Your own savings? Perfect. Funds from an RRSP through the homebuyers plan or an FHSA? Also great. Money from a previous home sale? Absolutely. And yes, a gift from your parents or another immediate family member is a fantastic option too, but it does require one extra little step. So if you're lucky enough to get a gift, you need a signed letter from the family member stating, and this part is crucial, that the money is a true gift, not a loan. Quick tip, your mortgage broker can give you a template for this letter, so don't worry about writing it from scratch. You also have to provide the paper trail, bank statements showing the money leaving their account and landing safely in yours. It's all about proving to the lender it's not just another debt in disguise. We're at the final level, your overall financial health. This is where lenders look at the numbers that really paint a picture of how you manage your money and your debt. It really all starts with your credit score. Think of 680 as the magic number. If your score is 680 or higher, you'll generally get access to the best mortgage rates from the major lenders. If you're a little lower, you've still got good options. But if you're under 600, you might face some hurdles. It's always a good idea to check your score for free with services like Credit Karma or Borrowell before you even start this whole process. Next up, we have your debt service ratios. Now, don't let the name scare you. They're just two simple calculations lenders use to see if you can comfortably afford the mortgage. Your GDS, or gross debt service, looks at your housing costs. That's your mortgage, taxes, and heat, and that number needs to be under 39% of your income. Then your TDS, or total debt service, adds all your other debts, like car payments or credit cards, into the mix. That total needs to stay below 44%. These ratios are really just the lender's way of making sure you won't be stretched too thin. So let's just boil this all down. If you remember nothing else from this, remember this core checklist. 2 pieces of ID, your last 2 years of NOAs, your last 2 years of T4s, and 90 days of bank statements for your down payment. Seriously, if you have these 4 things gathered and ready to go, you are 90% of the way there. Because being prepared isn't just about avoiding delays. It's about having the power to act decisively the second you find that perfect home. With your documents in hand, you're not just some hopeful buyer. You're a serious contender. So the only question left is, when that moment comes, will you be ready?